A CP2000 notice may look like a paperwork problem, a mismatch, a missing number, a broker form the IRS says does not match to your tax return. But in the crypto context, that mismatch can be much more dangerous than it first appears, because the IRS may have already received and analyzed forms number 1099-DA, 1099-K, 1099 miscellaneous, exchange data, or payment processor information in related K1s. If this information doesn't line up to what you reported, and if you respond carelessly, a broker mismatch can turn into a much larger IRS audit or even a criminal tax problem. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and for more than 25 years now, my team and I have represented taxpayers in high-risk IRS, California, and criminal tax matters, including cryptocurrency cases, basis disputes, wallet transfers, staking income, exchange reporting, and digital asset audits and criminal tax investigations. Today I'm going to explain why a CP2000 notice means, why these mismatches happen, and how to respond without making your case look worse. A CP2000 notice usually means the IRS has received third-party information that doesn't match to the return you filed. In a crypto case, that may involve form number 1099-K, form 1099 miscellaneous, exchange records, payment processor reports, or other broker information. A CP2000 is not technically a bill, it is a proposed adjustment notice. But that doesn't make it harmless. The IRS is effectively saying to you, we received information suggesting your return may not reflect all taxable crypto activity. And that is a problem that must be addressed carefully. A crypto mismatch does not automatically mean you committed tax fraud. In many cases, the problem begins because the IRS receives a gross proceeds number, while your actual gain or loss depends on your basis, your holding period, your fees, your wallet transfers, and the true character of the underlying transaction. For example, a broker may report $150,000 of digital asset proceeds, but if your basis was $140,000, the actual gain would only be $10,000. If that transaction was not properly reported on Form 8949 in Schedule D, the IRS is going to treat the gross proceeds as a much bigger issue than they really are. Additionally, if a 1099-K was issued by a brokerage, the IRS computer is looking for that revenue on Schedule C, not on Schedule D. The key problem is simple. The IRS sees the proceeds, but you must prove the basis. Crypto CP2000 mismatches often happen because of missing cost basis. After transfers between exchanges or wallets, duplicate reporting across platforms, incorrect taxpayer identification numbers, crypto-to-crypto trades that never made it onto Form 8949, staking a reward income, reported one way by the broker and another way on your tax return, payment processor reporting for digital asset receipts or exchange accounts opened under the wrong Social Security number or EIN. The IRS also expects taxpayers to answer the digital asset question accurately and to report all taxable digital asset income, gain, or loss, even if no form was ever issued or received. The first step is not to panic. Don't guess. Start by comparing what the CP2000 says the IRS received against what was actually reported on the return. The response must match the problem. If the issue involves broker proceeds that were never reported, you may need to add Form 8949 style transaction detail involving exchange exports, wallet transfer records, basis calculations, and supply evidence showing whether the transaction produced gain, loss, or ordinary income. If the IRS double-counted proceeds or matched them to the wrong taxpayer, the response should prove the duplication, the ownership issue, or the reporting error. This is not the place for a generic letter or a spreadsheet that cannot be tied back to real source records. A defensible crypto CP2000 response usually requires transaction-level support. That's going to include exchange CSV files, trade histories, wallet addresses, transaction hashes, bank records, broker statements, Form 1099-DA, Form 1099-K, Form 1099 miscellaneous, Form 8949 schedules, and records showing basis, fair market value, holding period, and especially wallet-to-wallet transfers. The IRS is not going to settle for a vague explanation here. It wants a reconciliation between broker data and the returns that were filed. And if your records cannot support that reconciliation, your case becomes much harder to contain. The CP2000 usually starts off as an automated underreporter issue, but a careless response can escalate it. If your records reveal unreported wallets, omitted exchanges, false no answers to the digital asset question, undisclosed business income, or inconsistent basis reporting, the IRS may begin looking beyond the single mismatch. The risk becomes much worse if the taxpayer tries to fix the problem by creating false records. Never backdate wallet notes. Never alter CSV exports. Never invent basis. Never relabel taxable swaps as transfers. Never hide offshore exchange accounts. And never ask the original preparer to come back in and create a story after the IRS has already made contact with you. This is how a mismatch issue turns into a criminal tax willfulness problem. California taxpayers have another layer of exposure. If a crypto CP2000 adjustment changes the federal return and results in additional California tax, the taxpayer generally must report the federal change to the Franchise Tax Board within 6 months of the final federal determination. And because California does not offer a special lower capital gains rate like Fed does, a federal crypto adjustment can create substantial California tax, penalties, and additional interest. So the issue is not just how to answer the IRS. It's also whether the response creates follow-on California civil and criminal tax exposure. If you received a CP2000 notice involving Forms 1099-DA, Forms 1099-K, Form 1099 miscellaneous, cryptocurrency exchange records, wallet activity, or other digital asset reporting, do not treat it as a simple paperwork issue. At the tax law offices of David W. Klasing, our dual licensed attorneys and CPAs help taxpayers identify the source of broker mismatches, reconstruct digital asset records, calculate basis, reconcile Form 8949 and Schedule D, evaluate ordinary income issues, and determine whether amended or corrected filings are appropriate. Our goal here is simple: damage control. Answer the notice accurately, preserve the taxpayer's credibility, and prevent a crypto mismatch from becoming a full-blown audit or criminal tax investigation. Call 1-800-681-1295 or visit Klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. Because when it comes to crypto, a CP2000 notice is often the moment when a record-keeping problem becomes a much more serious tax defense matter. Remember, if you don't respond to a CP2000 properly, you're going to end up owing additional tax, penalties, and interest, even if the government got the facts or the law wrong. Dave Klasing, tax attorney, CPA.